responses so that I know you guys are with me. Is everyone getting?
Yes, we are following. We are
Okay,
following.
It seems so.
okay, all right. So now waiting for price to tag on your key zones. Now you just need to know how to like spot out those key zones, and then the key zones we're just going to be looking at tonight is what supply and then demand key zones. So like I taught you guys in our last session about pullbacks. So with the knowledge of pullbacks, now a supply zone now is a zone where we expect price to start selling or dumping from. Are you getting me? And then the demand zone is a zone or a price range where we expect price to start buying from. So we normally mark out this supply and then demand zones in accordance with the trend of the markets. Are you guys getting me? So we have the bullish trend, the bearish trend, and then we also have the other one called the consolidation. So now in these scenarios, now we usually mark out our supply and demand zones on the higher time frame where we expect price to react from. So now how do we spot out this supply and demand zone? So that's just what we're just going to do now. So you listen attentively. So firstly, I taught you guys about pullbacks. I taught you guys about pullbacks. So firstly, for a valid supply zone, I will start with supply. We need what? A sweep and then a good engagement. Are you guys getting me? For a valid supply zone, we need a sweep and a good engagement. What do I mean by a sweep? A sweep is a fake break of structure to the upside, and then the real move is to the downside. So this is what I mean. So firstly, we have a high here like this, and then the next thing is what? A fake out or a fake break of structure to the upside. Now, I'm talking about the demand now, the supply now, sorry. A fake break of structure to the upside, and then the real move is to the downside. So this is what we want to see on the higher time frame. So firstly, this is called what? A good sweep of liquidity, because those people selling here, especially those trading supply and demand, support and resistance. So most people do sell here. Are you getting me? So these people that sold here now, their stop losses were wiped out. Their stop losses were wiped out, and then the real move was to the downside. So showing that now price has taken out liquidity at this top here, and then the real move was to the downside. So we'll have what? A good break of structure here. So this is definitely going to be what? Our supply zone, because you can see we had what? A valid pullback and then another valid pullback that took out this other high, and then the real move was to the downside. So in a scenario like this, where we spot out a model like this or a structure like this, now this is called what? A supply zone. So where is our supply zone? Definitely our supply zone is here. So now what I'm just trying to say here is that our supply zone must have what? A good sweep of liquidity, and then I've explained what a sweep of liquidity means. A sweep of liquidity is it's a fake break of structure to the upside, and then the real move is to the downside for a what? Supply zone. So you guys can see what happened here. These people that sold here, their stop losses were taken out. Sorry, let me just mark out this stuff. Their stop losses were taken out, and then the real move was what? To the downside. And then here is what? Our good supply zone. So what do we expect, guys? We expect price now to come back, and then what? React. We expect price to like tap on this our supply zone and then start selling to the downside. So that's what we expect now to happen on our supply zone. Hope you are getting me clearly.
Yes.
Okay. Like clearly, and then you're also seeing my screen very clearly.
Yeah, yeah, yeah.
Okay. And then that's for what? The supply zone. Then another thing that a supply zone must have is what? An inducement. An inducement or structural liquidity. Though most supply zones doesn't have an inducement. Are you getting me? But now for it to be more valid, it needs to come with an inducement, or an inducement needs to be formed now close towards the supply zone. Now, what is an inducement or structural liquidity? It's a valid pullback now that forms close to the supply zone. So what is a valid pullback? So this is what a valid pullback. So this structural liquidity or inducement now tends to like tap on the supply, but it will not tap on the supply and then break structure to the downside also. Although we have two types of structural liquidity or inducements, we have the main one, and then we have what's the engineering liquidity. I don't know whether you guys have heard about engineering liquidity before. And engineering liquidity do not break structure. Are you getting me? But the other ones now usually break structure. Like this is what I mean. Engineering liquidity forms something like this, and then it will not break this other structure. It will just like tend to tap there and then form something like this and take out this side and tap on the supply and then move to the downside. Why the other one, the main liquidity or inducement will break structure first and then come back again and to take that high and then continue the push to the downside. So in a case like this now, you see that this one now broke the down structure and then came back now to take out this high and then the whole move was to the downside. Why the engineering liquidity or inducement, it don't it do not break the structure, it will just form a high and then tends to pull back without breaking structure, and then it will form another high again that will take out this one, and then the whole move will be to the downside. So now this one is called the engineering liquidity, while this other one is what the normal liquidity or inducement. So now for us like spot out a good supply or demand zones, like I said, firstly, we need to have a good sweep of liquidity on the higher time frame, and then secondly, we need to have what a liquidity or what an inducement close to what the supply and then the demand zone. So this is what I mean. So like I said, a fake break of structure to the upside, forming a sweep of liquidity. So this is what I mean. A fake break of structure to the upside, forming a sweep of liquidity. And then next thing is what? Break of structure to the downside, inducement of structural liquidity, and then what? The will break to the downside. So in a case like this, we see a structure formed like this on a higher time frame. This is called what? A good supply zone. So this is what our good supply zone. So that's our sweep, and then our what? Inducement or structural liquidity. And mind you now, this structural liquidity won't be above the sweep. Take note, this is another mistake and most people do make. This structural liquidity won't be above this sweep like this. No, it is either equal or what's below. Are you guys getting me? It shouldn't be like this. No, here now should be higher, and then the structural liquidity now or the inducement should be lower, forming something like this. This shouldn't go this shouldn't go above this other one. It should be either the same price or what's below for what the supply zone. So like I said now, we have two types of supply zone. We have the one with structural liquidity, and then we also have another one that doesn't have what a structural liquidity. But this one that has structural liquidity plays out well compared to the one that doesn't have what a structural liquidity. So this is what I mean. So this one has a structural liquidity, while this other one just has what a good sweep and then a break of structure to the downside. So this is what I mean. Sweep here and then supply. Why this other one? After the sweep, we also have what our engagement, and then we had what the final break of structure to the downside. So this is what our supply zone. And mind you, all these are on the what higher time frame. So this is for what the supply zones. And then for demand zones, same thing also applicable, but the reverse is just the case. So for demand zones, firstly, we just need what a good sweep of liquidity. So what do I say? It's a sweep of liquidity. Sweep of liquidity is a fake break of structure to the downside, while the real move is to the upside. We're forming something like this. So this is our main break of structure. This is our main break of structure here. Why This other case now, the people that sold or the people that bought here, sorry, the people that bought here, the stop losses were just counted or taken out, and then it moved to their direction. So in a case like this, we said the market has what's taken out liquidity here. So automatically in a scenario like this on a higher time frame, this is automatically what our demand zone. So we expect price to later come back here and then buy from this zone. So like I said, now we'll have two types of demand zone. We have the one with structural liquidity and without structural liquidity, like this one, for example. So we expect price to later bounce back to this area and then begin to buy to the upside. And then we also have another one with an engagement. So same principle, a fake break of structure to the downside or a sweep, and then the real break is to the upside. So in a case study like this, sweep, break to the upside, and then what? A structural liquidity or engagement. So like I said, now this structural liquidity now shouldn't be below here. It should be above this sweep, like the high that was swept. Your structural liquidity should be above all the same price with it. It shouldn't be what's below like this. No, it should be what's above and then another break of structure. So in a scenario like this is what structural liquidity, which price will take out. And then this is what our good demand zone. So what do you expect, guys? We expect price to later come back and then tap on our demand zone, and then we'll look for confirmations on our lower time frame and then buy to the upside. So that is just the textbook explanation of what a good supply or demand zone. And then another explanation of supply and demand zone is that a supply or demand zones are zones where price rapidly sold off from or rapidly bought from. Are you guys getting me? So you just need to take note of this one. A supply zone, let's say price just got, let me say the chart just got to a particular price and suddenly dumped or slumped down from there, especially on the higher time frame. And then price just sold off very well from that zone. That zone is also what a supply zone because there is a reason why price started to dump from that zone. Are you getting me? So most times when price will get there again, we expect some reactions on that zone. Are you getting me? So let's say this is where price started to dump from, and then we expect price later retrace back here and then dump. Same thing also applicable in the best scenario. Let's say price just started to buy from here rapidly to the upside. There is a reason why price started buying from here rapidly. So that means this zone should be what? A demand zone also. So if price gets here and then gives us a kind of confirmation, we can also what? Buy from here or what? Sell from here. Hope you guys are getting me. I'm just trying to break down everything for you guys. Are you guys with me? Damian and Yusuf.
Yeah, yeah.
Damian, are you there? Damian, maybe he's doing something. So that is just a good explanation of supply and then demand zones. So I'm just going to show you guys how supply and demand zones now works on the chart, and then I'm just going to mark it out for you guys also. So firstly, let me use it. I think BTC forms that very well. BTC forms that stuff very well. So why is Raipo pumping now? Okay, he had a lawsuit today. Okay, let's use BTC as a case study. Let's just use BTC as a case study here. Let's use BTC as a case study. Why is this one dumping? So guys, let's use BTC as a case study. So this is the 1 hour time frame. So like I said, we'll mark out supply and demand zones on the higher time frame, like the 3 hours and above. So let me use 3 hours now to mark out my supply and then my demand zones. Let me just switch to the 3 hour time frame and then look for a good sweep and then mostly an engagement. And then let's see how price now will react from those zones now. Let me just go back in time and then start to mark out my supply and demand zones. Yeah, so this is it, guys. Hope you can see my screen very clearly. Are you seeing my screen?
Yes.
Okay. So let me start to mark out my supply and demand zones, and then let's see how price will react to those zones, and then we're good to go. So firstly, like I said, a good supply or demand zone must have what a good sweep of liquidity. So like I said, a sweep of liquidity is a fake break of structure to the upside or downside, and then the actual move is to the opposite side. So you guys can all see that we have what a downtrend here. This is a bearish trend or a downtrend. So mostly, or it's always good to work with the trend of the markets. So I will be looking for what's my supply zones, which is what my resistance zones. So firstly, like I said, now it should have a good sweep of liquidity. So this is what I mean by sweep of liquidity. You guys can see a sweep of liquidity is a week to week sweep. You guys can see a good sweep here. And then we had what um um good break of structure to the downside. That means this zone is automatically our supply zone. So this zone is automatically our supply zone. So let's just extend to the right hand side and then see what price will do when price taps on that supply zone. That's what I'll be doing now. And then it also came with an inducement, like I told you guys. So you guys can see this inducement here. So we expect price now to take out these inducements and then continue down to the downside. So let's just see what happened. You guys see price took out these inducements and then what also dumped to the downside. And then price dumping to the downside now, it's creating another supply zone. So this is what you guys need to take note of. When price creates a supply zone like this, and then an engagement, and then a break to the downside, and then price now takes out these engagements and break again to the downside. Take note that this high now, this particular high now is not a protected high because it has taken out engagement or a high and then broken structure to the downside. So particularly now this zone is what a good supply zone. So what we expect again, we expect price later come and tap that zone and then dump to the downside. So take note, anytime price takes out a high or a low, like in a form of liquidity sweep, and then gives a good break of structure to the opposite side. So that zone now is automatically a good supply or demand zone. Hope you understand it. So that is just what happened there. So firstly, we had this sweep, an engagement, and then a break to the downside, as you guys can see. And then we anticipated price now to come and then take out the structural liquidity and give us a good break to the downside also. And that is what happened here exactly. Price came and then took out the structural liquidity and then did a break of structure to the downside like this. So after a break of structure, what we expect again, we expect price to later come back to this zone and act as what a supply zone. Like this zone is still valid, and then you all can see that this zone also had what an inducement. Like I said, an inducement or structural liquidity is a valid pullback formed after price has what swept liquidity. So this is our inducement. So let's just see extend price and then see what price will do when price gets to that zone. So you guys can see again, price came to that zone and then did what? Slumped down again to the downside. So like I always say now, anytime price takes out a high or a low and then gives a good break of structure to the opposite side, then that high or a low automatically becomes a good supply or demand zone. So this is it, guys. You guys can see price now tested here and then dumped to the downside and then came back again now, took out this other high, created an inducement and then dumped again to the downside. So we're expecting price to still continue selling from here. So we expect price to come and take out our structural liquidity and then start selling from here. So you guys can see what happened. Price came and then tested it, dumped a bit, and then invalidated that zone simply because price has done what? A change of character or a change of trend from the downtrend to the uptrend. So from in these zones now, from these zones that he marked out all the supply, now you can see that price was still trending down. So in a downtrending market like this, all what we're just going to be looking for are what good supply zones, which I've tried now to mark out some, but not all, because there are other minor supply zones inside. So you guys can see this one also. Price took out this particular high and then slumped down, giving a good break of structure here to the downside. So you guys can see what happened. It also created an engagement after the sweep, which is this other one. So price now later came, took out the engagement and then dumped to the downside, even though it did not give us a good break of structure. So price respected this other zone also, and then other minor supply and then minor supply zones inside. So you guys can see also demand zones, same thing applicable. Always, all what we want is what? A good sweep and then a good break to the upside for what? The demand zone. So for instance, this other one, we had a good sweep and then a good break to the upside, making it what? A supply zone, a demand zone, sorry, making it a good demand zone, sorry. So this is what I mean. We had a good sweep here. Like I said, a sweep is like a fake book of structure to the downside, and then the actual move is to the upside. So we had a good sweep there, and then a good break of structure to the upside. So here you can see a good break of structure to the upside. So making this zone was a good demand zone. So you guys can see what happened. Price later came back now, tapped on the demand zone, and then did what? A kind of good reaction to the upside. Now, same thing also applicable here. So since price now took out this liquidity, that means this zone also will also be a good demand zone. So same thing applicable. Price came and then tapped and then gave reaction to the upside until price now tapped on our main supply zone and then started to dump to the downside. So from there now we can start looking for sell continuation because price has tapped on our extreme supply zone. So you guys can see also here a good sweep here and then a good break to the downside here. After a good sweep and a good break, here automatically is what? Our supply zone. So price came, tap on the supply zone and then dump to the downside. So here automatically should be our supply zone also. But let's just mark it out and then stretch it out and then see how price will react towards, how price will react to that zone. So you can see price tapped into the zone and then gave a downward reaction, even though it later invalidated, but it respected that supply zone also. So until you have a change of trend, you can keep marking out your supply zones in a downtrend and then your demand zones in an uptrend. So let me just look for an uptrending market and then try to mark out my supply, my demand zone, sorry. So firstly, we need a good sweep and then what? An engagement, like I said. So you all can see we began to have what? A break of high and then another break of high and then another break of high also, meaning that price is changing from what? Bearish to what? Bullish. So after those breaks of high, I now see that price is what? Bullish. So let's look for what? A good demand zone. Like I said, a demand must have a sweep. So you guys can see this other sweep is what? Very clean and valid. And then it also came with what? An inducement or structural liquidity, which is this one in particular. So after something like this forms, and then we'll have another good break of structure to the upside. So expect price like to come to that zone and then give a kind of buy reaction. So you guys can see what happened. Price came down to that zone, took out the structural liquidity, and then gave what? A good reaction to the upside. So it's just same thing every time, every time. Just look for a high or a low that has a good sweep, and then it is in line with the trend of the market. So you guys can see also here, even this zone that they marked out is a good demand zone simply because this candle now took out this other candle low. So it is a good demand zone. That's why I extended this place out. You guys can see price later came back, tapped in, and then gave a reaction to the upside. Then same thing applicable why price sold down rapidly from here. You guys can see a good sweep here. So this sweep now, it's not only a high or a low, even a weak sweep. Hope you're getting me. You all know what is a week. I taught you guys about weeks of a candle in our first class. So you guys can see this one in particular, it wasn't even a high, it was what a week to week sweep, and then a good change of character, a break of structure to the downside, and then it's also a good supply zone. So you guys can see what happened. Price attack came back to that zone and then slumped to the downside. Same thing applicable here. We had a good week to week sweep and then a good break of structure, which is this other one to the downside. So price later came back there. Now took out the engagements, tapped on our supply zone, and then gave a dump to the downside. And then gave a dump to the downside. So it's just same thing every time, and then it should be in line with the trend of the market. And same thing why BTC started buying from here because we had a good internal sweep here, and then our demand zone here. So price tapped on the demand and then also started buying to the upside. So it's just a simple, or let me see, what's it called? It's just a simple thing. Just look for a high or a low that has what a sweep of a previous high or a week, and then a good break of structure to the upside or downside according to the trend of the market, and then mark out that zone and then go back or wait and then check out how price will react to the zone. So that's just how to spot out good supply and then demand zones. So for the fair value gaps and then breaker blocks, we're just going to have another session for that because we are already out of time. Like I said, we just spent 40 minutes and then we're done. So I will use this remaining time now to like entertain your questions and then where you want me to explain more. So if you know that you have questions or doubts anywhere, you just want me to explain more on a particular point, you can just unmute yourself and say something. Damian and Yusuf, I don't know what's wrong with others. They did not come today. Maybe they will go and watch the recorded session. So I'm entertaining your questions now. Anyone like that? Yusuf, are you still active?
Yes, I'm active. Can you explain more about it, the week to week sweep and the week to week engagement status?
Okay, is that your question? And what about you,
Yeah.
Damian? Abi has gone to bed. Damian, are you still active? You guys don't sleep. Ah. So week to week sweep is another form of a good supply and demand zone, but people don't know. So especially you, it's not every time price will give what a high sweep, like a sweep of a previous high. Now even a good week sweep, like in a scenario like this, anytime price takes out a week like this and then the candle closes and then it is a week, just know that, especially on the higher time frame, just know that price now will come to like take out the high. Are you getting me? Or if it is a low now, it will take out that low, especially in a trending market. So in a buy market like this or in a bullish trend like this, market took out this week. Just know that it's a thing of buy continuation. So anytime market takes out a week of a previous candle, just know that price now will aim for what's the next liquidity. So where is the next liquidity here? Price took out this downward liquidity. So definitely it's just going to head for the what's next one. So this to just validate what I'm saying. Let's just check it out on the daily time frame and then maybe from there I understand better what I'm saying. Just hold. So this is what I'm trying to say. Now it will make more sense on the daily time frame because yeah. So this is what I'm trying to see. So specifically, you see this one, it is a week here. So this other candle now took out this other week, this other daily week. So definitely when price will close, like you just wait for price now, you just wait for this other candle that swept this other one out to close. As it closes, just know that because price has taken out this other liquidity. So price now will head now to the next liquidity, which is the upper one, because it has taken this lower one. So where is the upper liquidity? It's definitely this one. So that's why we saw a rapid buy from this zone to this other zone. Are you getting me? Now, same thing applicable here. It's just a thing of logic. So price took out this other one also. Price took out this other liquidity. So this stuff, let me say it works out 80% of the times because nothing is 100%. So once price takes out this other liquidity down here, just know that price is just going to head for the high. So it's something of a lower sweep and then it will head for the high. And then if it's for a downtrend, just know that it will sweep an upper wick and then it will head for the low. So it's just a thing of what's continuation. Are you getting me? Hello?
Yes, yes,
So you're clear now.
yes.
Okay.
So I
So
have another question.
I'll continue.
Like how do I put it? Like in a trending market, so price is reacting from a demand.
Yeah.
So like there's a valid supply at the top. So how do you do when price come for the this thing for the supplies? Or how do you do? Do you continue finding buys or
Now you wait for a reaction from that zone before you know what to do. Are you getting me? Because most times now price will like that touch on the supply zone, react, and then it invalidates. Are you getting me? So if your supply zone doesn't give a good break of structure, don't just know that that zone will not work. Are you getting me? So you wait now, price taps or gets to your supply zone, gives a reaction, and then it is not giving you a good break of structure. Instead, what price will do next is what? Go back and then invalidate it. Are you getting me? But if price taps on your supply zone and then give a good break of structure to the downside, that means price wants to like really respect that zone. So in that case now, you can start looking for what? A sell model. But most times now, it's just good now to stay out of markets like that. Are you getting me? Because sometimes now you start to sell now, but markets will like tend to still try to like obey the trend of the market. So that until you see a change of trend or a change of character, my just keep like buying from your demand zones in an uptrend and then keep selling from your supply zones in a downtrend. So that's just the simple logic behind it. Are you
okay?
getting? Yeah.
Yeah,
Any other question?
no, I think
Okay. So
that-
we'll call it a day. Maybe on today is Thursday, right? On Saturday
yeah, today is Thursday.
or Saturday or probably on Sunday we'll have another session. But I think it should be on Sunday. So on Sunday we'll have another session. So see you again on Sunday. And then I'll just drop this recorded video now in the group. So those that are not here can go and watch. So good night.
Okay,
Sleep well. Take care. See you next time.
thank you.